It's about that time of day again. My name is Joseph. Monday evening, June the 18th. Welcome back to your nightly newsletter. My job tonight is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. Tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude is bullish after a V-bottom reversal off last week's low. And with such a strong move higher today, I'm waiting patiently for a nice deep pullback for buying opportunities at key support levels tomorrow morning. The S&P is also bullish, but a recent double top at this afternoon's high is telling me to wait for the most reliable buying opportunities down at the low of a short-term trading range tomorrow morning. Nasdaq is also bullish with its own channel, but a key grind break clue on the Nasdaq tonight tells me I'm looking for buying opportunities using a trap low pattern, and I've got my eyes on 48.5 tomorrow morning on that Nasdaq. Gold is bearish with a spike in range pattern. That tells me to look for selling opportunities using the 2-try rule up above the range high tomorrow morning. And of course, we can't forget about the euro. The euro, head of the ECB summit this week, is range bound with a bear bias tonight. That tells me to look for selling opportunities using buyer failures up above the range high tomorrow morning. Boy, oh boy, we got a big week ahead of us, guys. We're coming out of what was called the week from hell last week, and now we've got a bunch of major news events later on this week, and everybody's getting excited about these opportunities we're getting in this fourth week of the month of June. Got a great newsletter as always for you guys and gals tonight. I'm going to dive into those charts and put the plan together in just a few moments. But first, if you're watching me tonight on YouTube, please don't forget you can find a detailed description of this entire trading strategy written out in text format right here on my blog at sidewaysmarkets.com. Just scroll down below the video and you'll find all the text for tonight's newsletter. Also, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. I look forward to answering questions in the comment section. And if you like what you see tonight, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to sidewaysmarkets.com. This is where all the action happens every day, right? Head over to the blog at Sideways Markets, and while you're here, join our mailing list. That's right. Give me your name and your email address. I promise never any spam. I'll send you an email every time I publish something new. And also, did you know I'm always posting exclusive content on my social media channels? That's right. Quotes, videos, links, charts, all kinds of great content, right? Trading and not so trading related sometimes, but I think if you love this newsletter, I think you'll love to follow me on social. So do that in the lower left-hand corner. And then how about some charts from tonight's video? Yeah, nice and easy, right? All the charts from tonight's video, they are available for you to download by following that link right below the video tonight on the blog. And please don't forget, right, speaking of tomorrow, please don't forget upper right-hand corner here. If you're not a member here at School of Trade and you'd like to come out and join me, right, for a trading session, we can learn the strategy, grab that free pass in the upper right-hand corner, right, and come learn more about this trading strategy as part of our free pass and our free trial. And don't forget, if you got any questions, you can always post those questions in the comment section below the video on YouTube, or I've got live support on the right-hand side of our website if you need any help along the way. All right, guys. Boy, once again, hope you guys had a great weekend out there. Hope you guys had a great Father's Day. I'm sure there's a couple dads tuning in here tonight, so hopefully you had a fantastic day. I had a great day. I had some time with my grandfather and my father yesterday. It was really you really couldn't have asked for a better Father's Day. But we're back in the action here again this week. We got a big week ahead of us here. Now, a couple things to talk about here. First of all, Monday, Tuesday, and Wednesday, we have the ECB summit. Now, this happens every year. They get a bunch of bankers in a room together, and they talk about how they're going to save the world, right? The bottom line, though, is that we're obviously done with Monday. Right, tomorrow, not that big of a headline tomorrow, but on Wednesday, right, Wednesday afternoon in London, right, it'll be 9:30 Eastern time in the U.S. But we're going to hear from Powell, right? That's our head of the Fed, right? Draghi, of course, right? In Europe, you got Kuroda, right? In Japan, right? And of course, I'm gonna forget where low is from. I think he's a previous. Anyways, it doesn't really matter. The bottom line is we got a big speaking event on Wednesday afternoon. Now, we're obviously a ways away from worrying about Wednesday afternoon right now, but if you hadn't noticed today, the gold and the euro are really quiet right now, and I would imagine, right, that's why it's so quiet. So we got some ranges on the euro and the gold, so hopefully those are the only markets that get impacted by this, but just be aware, as we get closer to that Wednesday session, these gold and euro markets may continue to kind of coil up here into a range, which is fine by me. We'll trade it as a range-bound market nonetheless, though, but that's what's happening here on the gold and the euro. And then I also want to give you a heads up, too. Friday, the 22nd, we've got a highly anticipated OPEC meeting. They are talking about, well, first of all, Russia is talking about bailing on their production cut, and they're also talking about actually increasing production. So we got crude moving higher today, but that may not last much longer as rumors start to fly about an increase in production, which should be a negative, right, correlation to the price of oil. So as we get closer to the end of the week, right, we got the OPEC meeting, right, coming out there on Friday. So I would assume as we go into Thursday and Friday, crude oil will be a little bit more on the challenging side. So we definitely have some big kind of, overarching news events this week. As of tomorrow, we've got housing starts tomorrow morning at 8:30 Eastern time. They are expecting a really good rebound from last month's housing starts. Last month's housing starts were very poor. They're expecting the warmer weather to spur that number going to tomorrow's session. And then we got existing home sales number. We got the inventories on Wednesday. We got Philly Fed on Thursday, and of course, right, PMI on Friday. So we got a little bit of news kind of peppered in everywhere here this week. Tomorrow morning, though, 8:30 Eastern time, housing starts. There's not a lot of other stuff going on. We're a little bit too far away from Wednesday afternoon, a little bit too far away from the OPEC meeting on Friday. So it should be a pretty good day tomorrow with that number starting out 8:30 Eastern time. As always, we'll be in our trade room at 8 o'clock Eastern time, so be ready to rock and roll on that news event, right, first thing tomorrow morning. All right, let's jump into our charts here tonight. We got crude oil, S&P, Nasdaq, gold, and I'll wrap up this evening on the mighty euro. Starting off tonight with black gold, the Texas T, right, the crude oil futures. Crude is bullish with a spike in channel pattern this evening, telling me to look for buying opportunities after a deep pullback into support levels tomorrow morning. Now, one place I'm looking at closely is that 64.78 level because the original bull channel only got a shallow pullback for buyers. So I assume there are a lot of buyers still waiting on the sidelines for their chance to get long, right, at a low enough price tomorrow morning. Now, there's a lot that we can really cover on this chart right now. First of all, the most obvious here, right, is this complete V bottom, right, off of last Friday. If you recall, last Friday was quad witching, right? And so we knew we were in for a bit of craziness last Friday, and we got that big monster, right, almost, right, a little more than $3 move on the way down. Oh, speaking of which, don't forget, last Friday was rollover too, right? This is the 08-18 contract. Remember, around the 18th of every month, crude oil usually rolls over. We talked about that last week. Just in case you weren't here though last Friday, I want to make sure you know we were on the 8-18 contract for at least another month, right? Until the 18th of July, right? Which is crazy to say. But the bottom line though is, right, a V bottom down. Now, V bottoms are pretty darn simple, right? When we see a market go this overdone and then completely run on the back, right, in the opposite direction, you know where they're trying to go, right? They're trying to go back up to pretty much exactly where this whole thing came from. So that is the kind of overarching target, right? That is the big target for those buyers. And of course, we put a little measured move action going on here. And that puts us right in the ballpark, right? So we are definitely seeing one leg, two legs. There's potential here for this thing to really cook, right, as we go higher here. Especially since, right, it's potential for a short covering rally, right? Anyone who's still trying to hold on to their shorts right now, right? Once this thing keeps going higher here, they're going to be in trouble, right? They're going to get out of their trades, and those sellers who are in the market right now, they get out of their short positions. This will lead to a short covering rally. So that's the biggest thing right now, is that V bottom. Another really big clue is this little tiny channel here, right? That little tiny channel here. Now you'll notice that channel, right? Well, real quick. When we see a strong move in one direction, we usually see a relatively deep pullback. Some people would say halfway, right? And then we go back up to retest the high, right? So whenever we see a real strong move in one direction, some folks would say halfway. I don't really think it has to be halfway, but the bottom line is that whenever we see a strong move in one direction, we typically will see a relatively deep pullback. That allows the buyers who didn't want to buy as the market was going higher, that allows for professionals to buy nice and low, right? And then once they buy low, where's their target? Their target, of course, is back up, right, to retest that high. If they can go through that high, right, then we look for the A, B, C, D, right, kind of the measured move, A, B, right, equals C, D target, right, overhead. Okay, that's if they can get to that high. Okay, now there's a lot I just gave you here right now. Okay, so again, one more time here, because it's going to play into a lot we're going to talk about tonight in the newsletter. Strong move up, relatively deep pullback. We then retest the high. When we retest the high, that's the target. If we can go through that high, right? How do we know? We see proof. We'll talk about that in a moment, right? If we can go through that high, then we start looking for, right, that A. That's Z, by the way. That's not A, right? Let's go back. There you go. A. I swear I can speak English pretty fine, but the letters sometimes. A, B, C, and D, right? So there comes your, right, there's your big target. All right, guys? So that becomes the big target if we can get it. So what are the big things here, right? Strong move, deep pullback, retest the high, and then, of course, go through the high, right, for a nice big symmetrical, right, A, B, C, D target. Okay, now, what I just showed you, okay, is going to be used in different ways throughout the rest of this video, right? And for example, here's a real strong move up, right? Real strong move up. Do we see a deep pullback? No. Look, there's no deep pullback, right? And again, I wouldn't go as specific as 50%, but let's just put a halfway marker. Oh, come on, Joe. Let's put a halfway marker on this. And you can see, right? Nowhere even close to a deep pullback. Okay? So what does that tell me? Well, this particular case tells me that buyers who probably weren't buying here, right, because of just look left, right? So we come out of last Friday's bloodbath, and the market just takes off to the upside, right? And what happens is when we see a V bottom, markets accelerate like this because it's sellers who are buying right now. Right? This is not buyers buying here, guys. These are sellers buying, right? There are rumors flying all over the place right now for the OPEC meeting on Friday. It's easy to see why sellers might have been spooked. They want to take their profit before we get too close to that OPEC meeting, right? And who knows, right? So, okay. The bottom line, though, is, right, these are sellers buying. These are sellers who are already in, getting out of their long positions, okay? And you'll notice, big, strong move up, shallow pullback. Okay, shallow pullback. That means all the buyers who are going, hey, I want to buy low down here. You forgot about me, right? They're not going to chase after this now. They're going to keep waiting for a chance to buy low. So that's my goal tomorrow. At some point, assuming we don't see another, again, this is always tough because these short covering rallies, they can just keep going higher without really any pullback. But when they do pull back, right, that's when buyers are going to be waiting. It's the age-old story. 85% of the market is not really going to be tradable. It's that 15% of the market where you sink, right? You dig your heels in, you roll your sleeves up, and you trade it. That's what I'm waiting for tomorrow. So where can I buy low, right? Where can I buy nice and low? Where can I find a level of support? The ideal is back at that shallow pullback. I'd love to see us pull back into that shallow pullback area, right? I'd also love to see us use this trend line down to that low and get these together, right? Now we have a channel or kind of like a hidden trend line there, along with that, again, that shallow pullback. I mean, that's why I said that 64.78 area is beautiful, right? It's a beautiful area there, right, to be a buyer. Now, in all reality, though, I can look for buys off any real support level. We have a spike in channel here, right? There's my spike in channel. I'd love to incorporate this reversal line along with this channel, right? So now we've got kind of a confluence area right here between that reversal line, right, and that channel low. That will be great. Buying off the, again, 78, that will be great. So those are my, right, that's what I want to see tomorrow. I want to see us get a nice deep pullback, right? And if we keep going higher here, then no problem, right? We'll adjust and we'll look for a pull. We'll still be waiting for that pullback. Okay, so again, strong move up, right? Shallow pullback, no deep pullback. Again, it's easy to know why. Short covering rally. So that's why we probably haven't seen a deep pullback, because these aren't buyers buying. These are sellers buying, getting out of their short positions. Okay, so let's do this. What if price goes up? What if price goes down? And what if price goes sideways here? Okay, let's zoom in a little bit closer here. And I'd like to see us pull back, obviously, right? We'd like to see us pull back here a little bit. And again, we get that target up around that 66.78, 66.75 area. Okay, so first of all, let's go the pullback route. Okay, a couple options here. One would be at the top of the battle zone, other will be at the bottom of the battle zone. What I'm looking for when we get a deep pullback is I'm looking to get the opposite side of the market to think this trend has reversed. Okay, so if we get a strong pullback, we're going to go back below the moving average, right? Now, when I was a new trader, I read all the, the trading 101 books that were available back then. There weren't as many as there are today. But, one of the things it told me was, right, when you start seeing lower highs and higher lows, right, it's a bear market. So I want to get a nice deep pullback here. In fact, I want to get it deep enough to come back to a key level of support, such as that 65.25 area. And then I want to see sellers try to take this thing lower. I want to watch those sellers try to sell that pullback and go lower. See, remember, for a lot of rookies out there, I was the same way. Once I see a relatively deep pullback, I start thinking this market's bearish. Right? This is what the rookie trader version of me, right, would have said. We're bearish. So I'm going to look to sell that pullback, right, and keep going lower. Once get below the moving average, sell the moving average for a pullback. And that's exactly where I think we're going to have a great opportunity for a failure off that moving average. What this will do is it'll be a failure up above a prior swing. So buyers now will jump in when those sellers are getting stopped out. So a seller failure pattern occurring at a support level in a bull market. Okay, seller failure. Now, seller failure usually leads to quite a bit of strength. Okay, now I don't want to buy that strength. I want to wait for that strength to run a little bit out of momentum, and then I'm going to buy the pullback from there. One of the things you'll always see with me is I don't buy high. I've learned my lesson too many times. I buy low. I buy at support. So I'm looking for that buy right now at the failure, right, coming off of support. And I'm also looking for a buy here, right, coming off of, right, that moving average. Again, I have no interest in buying high, right? So as the market races higher here, I want to see us come down, get that moving average over, get those opposite side of the market, right, get the sellers to try to sell it. Now I know where their stops are. I can buy into their stops for one opportunity, or I can wait for the pullback, right, and buy it from there. Either way, that has me buying at support, never buying at resistance. Does that make sense? The same thing goes as we get a deeper pullback. Now, if we can get down in and around this 78 area, right, well, now we're talking. A deeper pullback may look like this, where we have a trend line coming down. We go 1, 2, we get above that trend line. Now what happens is the moving average comes over. We wait for again, sellers, they try to sell at the moving average. We know exactly where their stops are at that point. We can buy into their stops. That leads to bullish strength, because when sellers get stopped out, it leads to strength. And then we look for that pullback, right, going back higher again. Okay, so as you can see, it's the same basic pattern, right? It's a deep pullback. The bears will try, maybe they're successful, they'll try, right, to reverse the trend, just like they tried back here, just like they tried back here. You know, this is a good example, right? Down, up, see the bears there, right? The bears, they tried to sell at it, bam, right? They fail, price jumps on the failure, right? I want to see it again. One try, two try, failure, strength, strength into pullback, pullback into a retest of that, right, of that high. Okay, so failures, strength, pullback, retest that high. Now, I assume that a few of you guys and gals are here for the first time tonight. And I'm probably speaking Greek right now, or whatever language you don't expect or understand. I want to make this easier for you to get the most out of our time together, and to give you all the terminology, to give you a lot of kind of a cheat sheet, right, to work your way through. I'm going to give you a free trading course in the upper right-hand corner. So pause the video, not to worry, I'll be here when you come back. All right, and grab that free trading class, right? That free trading course, it'll teach you all the terminology, it'll teach you all the patterns, right? All the technical analysis tools that we use, okay? It'll be a great investment in your time, right? I'll also shoot you an invite, come out, right, and watch me actually use the strategy. All right, so grab that free class in the upper right-hand corner. You will not be disappointed. Okay, so now we know what happens if price comes back for us. Okay, what if price keeps going higher here? Right? Yeah, I mean, what if it keeps going higher here? If we see another jump higher, and again, it's possible because we had that short covering rally, right? If we see another jump higher here now we have to assume we're making a run, right, up to that measured move, up to that V bottom top, right? And at that point now, I do not want to chase this. What I do need to do though is find another level of support. Right? I don't buy at resistance. I want to buy at support. So if price goes higher here without us, okay, you stay patient and you wait to buy at support. It'll usually come, right, by finding those two highs, bring it down to that low, right? And then it'll usually be somewhere between, right, the prior high, right, and the low of that channel, right? So you're watching for that area right there on that pullback, right, to be a buyer going higher. And then as we get up into that high tomorrow, we've got to start thinking about that deep pullback, you know, middle to late morning tomorrow if it goes running, because I don't want to buy high, right? I want to buy nice and low. So we'll work those details out tomorrow once we actually see it. Now, we went with a strong move up into a trading range earlier today, right? What if that happens again? If we pull back, we get a double top, we pull back, right? Watch out for another trading range. If we see another trading range here forming, and how would you know if you're trading range? Double tops. Once you see double tops in a bull market, you then know you're dealing with a range. And when you're dealing with a range, now you know you're looking for what I call the two try rule to buy down below the low of that range. It's a bull bias. I don't want to buy high. I want to buy low. What I'm looking for now is a breakdown once, pull back twice, and then buy that two try failure. Bears try to break out once. They try to break out twice. We know that most breakouts fail in liquid markets, right? Not penny stocks, not cryptos. I understand. Those are illiquid markets, right? Real experienced traders, they trade liquid markets because that's where the reliable patterns are. Okay, illiquid markets, you can make some fast money, but you can lose the money just as fast, if not faster. Okay, that's why we focus on liquid markets. What we're looking for is I want to see that failure, right, of the breakout, right? The sellers are going to try to break out of this range. Most breakouts fail. One try, two try. I'm buying that second attempt, right, on the failure, going back up into that, right, going back up into that range. So if we do see it go sideways tomorrow, you get a great plan there, right, to take advantage of it. So deep pullback, right, for the buy back up, and then pull back down with a new spike in channel, or do we go sideways here and we look for the two try rule? We're going to know more, right? Only time will tell right now, guys. And don't forget, we'll be in the trade room tomorrow at 8 o'clock Eastern time if you want to join us. How about some S&P? Excuse me, the S&P is bullish with a channel this evening, but the big clue is the lack of follow through to new highs at the closing bell tonight. The bulls had strong move higher here today. They had a nice deep pullback for the opportunity to buy low. They want to they went back up to retest the high. Good for them. And now they're just sitting there. No clear proof, right, of the market wants to go higher. So what do we know right now, right? My plan now is I have to see some proof of these guys going higher here, right? Or else I can't buy up here. Right? And if I can't buy up here, where can I buy? I can buy down at the lows of this trading range. So now remember, right? Remember now, we talked about this earlier, okay? Strong move up, right? Deep pullback. See, look at this one. This one looks like, yeah, see, it went almost halfway. That's why I said, don't get too hung up on the exact 50% pullback, because that's not how trading works. Trading is never going to be precise. Okay, 2 plus 2 works in math, right? But 2 plus 2 is not always 4 in trading. It just isn't. Okay, and the sooner you kind of understand that, the better. This is not a science, right? It is very much, it's the law of large numbers, right? It's the coin toss theory, right? And it's an art form in a lot of different ways. Okay, so 2 plus 2 is not always 4 when it comes to day trading. That's a good example right there. But that's close enough, though, right? That is a nice deep pullback. Right, strong move up, nice deep pullback. Now, from here, where's their objective? Right, because now what? The buyers are what? The buyers are buying low. Right, so buyers get a chance to buy low. Where's their target? Their first target is back to retest the high, right? And then where from there? Then to a measured move. Okay, so you see how this is all coming together from what we said earlier. Okay, now you know I wasn't wasting your time at the beginning of tonight's video. Okay, so the measured move, that's where they want to go, right? But look where they are right now. We are really frustratingly kind of stubborn right there at that high. So right now, we are at the objective, right? That's what I call it. We're at the target, right? We've reached the target. Now we've got to see more. Do we go here, go back to that low and buy off that low? Or do we keep going higher? And if we go higher, right, we look for the buy off of support. Okay, so this is a great example. Strong move up, nice deep pullback, but the record skips now, right? Not good. We're sitting right at that high. Okay, so I'm basically looking for one of two scenarios tomorrow, guys. I'm looking for either a pullback down to the low of that range, right, which would basically create this as a double top, right? Double top, find that low, right? 1 try, 2 try, buy the low. Remember, we just talked about this on crude oil, right? So if we do make that run lower here, we're now at the low of a range. Okay, double tops, right? Anytime we see a bull market, double top, we know it's a range. Okay, what do we do at the low of the range? We let the bears try once, we let them try twice, right? And then we go looking for the buy going back up. Why 2? Why 2 tries? Well, because when a market makes a strong move in one direction, what does it want to do? You're right, it wants to do it again, doesn't it? You see how that little trick works in both directions? Right? Think about it. Anytime a market makes a strong move in one direction, what happens? It pulls back and wants to retest that high. Well, guys, the knife cuts both ways. If we make a run back down to that low, isn't that a strong move down? Most likely. What are they want to do? Yeah, they're not going to go, okay, we're here and done. I mean, they might do that. Let's be honest, right? I can't predict everything. But I will tell you, though, most of the time when the market moves strong like that, what's it going to do? It's going to do it again. And where's it trying to go? It's trying to go right back to that low again. So there it is, right? There's your 1 try, 2 try. Once they try, well, then let's do it, right? In other words, let those sellers, right? Let those sellers have their turn with the ball. Once they're done getting all tired out, then we find ourselves in a great spot now to capitalize on sellers who are taking profit, right? Becoming buyers, and buyers now buying off that low. I hope this is making sense because this has been a great example here today, and it really is the basis of a lot of what we do every day in our trade room, right? So 2 try rule, buy that low, right, of that range, right? But what if we keep going higher? Let's not forget, we're coming out of that big range, right, from last week's session, right? Remember this from last week? This is that trading range, if you recall. Remember we had that that quad witching Friday, right? That was all over the place, if you recall on that one. Right, but now here we are. We're trying to go back into that range now, right? So you get that big measured move target. That's obviously going to be a big milestone. It's right in the middle of that trading range. That works great. So 27.88, 27.87, that's the sweet spot, right? That's definitely my sweet spot as we try to rotate higher here. All right, so looking good there. So now we don't pull back, right? We go higher. What's the plan now? Well, as we go higher here, what happens? We start getting closer and closer to the objective. Now remember, I don't want to buy at resistance. Isn't that what this is? Right? This will be resistance area up here. So if we do see the market go higher here right now, don't take the bait. Okay? Wait for it to pull back. And basically what my vision on this is I'm going to try to incorporate a trap with that, right, with that trend line. So if we go higher here overnight, right, grab these little prior swings and look for a trap, right? A little trap down around that, right? Down around that trend line, right? Remember, you want to buy at support. One of my favorite ways to buy at support is to do so by using a combination of a trap and a rising support trend line. Okay, yeah, you're not going to get them all the time, okay? But when you do get a chance like this, you get a beautiful trend line going higher, that will be a great spot for us, right, to be a buyer, okay? Now, if we do end up back into that range tomorrow, okay, now we have a lot of bullish momentum. If we end up back in that range tomorrow, your job is to try to get long off of that low. So think about it this way. We go up, right? We're pulling back, or we're trying to, right, buy off that low, right? We go up, one try, two try, right, buying off that low. What you don't want to do is you don't want to buy into that high. I don't care how strong the market feels. Okay, you don't want to buy into that high, right? Because this market could easily become a little puppy dog tomorrow, right, once it gets back into that range again. All right, guys? Really, really good example there. Deep pullback, retest of the high. Where do we go from here? Do we go up and back and buy there? Or, right, do we go down, failure, and then back up? And again, two-try rule, failure patterns, trap patterns. You guys can learn all about these patterns by taking that free trading course in the upper right-hand corner. There's a little information icon up there, right? Grab that. Again, just pause the video. I'll be here when you get back, and we can keep on rolling here. All right, now, how about some Nasdaq? Now, I hope that you are screaming at the monitor right now, right? It's okay. Just unload on this video, right? You see it, right? You already see it, don't you? Okay, if you don't see it yet, not to worry. I'm gonna bring you up on speed here and clue you in on this great example of what we've seen a couple times already. Here's the Nasdaq now, right? It's bullish. It's obviously bullish. We have another one of those V bottoms, right? This time off the pre-market lows, not yesterday, right? And that tells me that buyers want to retest today's high, right? This is that V bottom. Remember we talked about this on the crude. Right? The V bottom, what do they want? They want to go back up to that 94. Yeah, so we're getting pretty close to that level right now, aren't we? Right? We don't want to be buying high here. Okay, I don't want to give it away right now. Let's keep going. Okay, so the V bottom, the buyers want to get back to that 94, right, today's high. But look at the price action we're seeing in this chart right now. We see a strong move up, a shallow pullback, and they can barely even touch this high. Look, strong move up. Right? Look at that shallow pullback there. This reminds me of oil, right? Now, again, I don't want to go too far down this rabbit hole, right? There's your halfway point. Again, guys, please don't get so wrapped up in these specific Fibonacci ratios. I'm just using this as an illustration. If you get bound by Fibonacci, you're going to be disappointed with your results in most situations. I'm sure there are going to be a couple strategies out there that will work, right? But the vast majority of Fibonacci-based strategies, well, the problem is that the markets go from trending to range bound all the time. And if you're just focused on buying pullbacks using fibs, you'll make money during trending markets, you'll give it all back during the range bound markets, and you'll just get beat up and chopped up in the process. So just be careful with how much trust you put in Fibonacci. I put all my trust in previous levels. For example, like this one right here, right? Everybody can see that level. There's no need for some calculation, right? No need for a calculation. Everybody knows where that level is. Right? Just like everybody knows where this level is and this level is. Okay. The bottom line, though, is we see a strong move up, a shallow pullback, right? And then where's the goal? Where's the objective? It's to go back and retest the high. Well, hello, what the heck is the problem? What's wrong? Look at the wicks. You tell me. Does that look like a market that wants to explode higher? Certainly not to me. So we can tell right now, I've got a couple big problems here, right? First of all, strong move up, right? They should have had no problem retesting that high. It's a shallow pullback, right? What does a shallow pullback tell you to do? Wait for the deep pullback. Why, right? Because people are sitting back here going, hey, don't forget about me, right? There's buyers waiting to buy low right now, right? So I look at that shallow pullback, and that becomes a great spot, right, for a buy. And that little trick will work on pretty much everything, right? Strong move up, shallow pullback, retest. Now, next step. Have we retested yet? We have not retested yet. So we should retest at some point, right? I hope so. I hope so. You can see it's looking pretty sloppy here right now. But the bottom line, though, is can we buy here right now? No, right? We don't want to buy here because why? Because that's the objective, right? That's the objective, right? That is the goal. That's the mission accomplished. That's the finish line, at least for now. And then if we can get through the objective, then where do we go? Then we go to the measured move. Okay? So now, great example here, right? See what I said earlier? This is it's just a little bit different, right, than all the other scenarios. Okay? We've seen a deep pullback. We've seen a shallow pullback, right? This one hasn't even retested its high yet. So if the market pulls back, I want to allow buyers to buy, right, using that failure pattern. If price goes higher here, I've got a heads up. Wait, do we see rejection or do we see proof of the market going higher? Okay, so let's break this down here. Great example, right? Strong move up, right? Deep pullback, no deep pullback. Looking for a buy down here. What do we want? I want to see a strong move down. I'd love to see a nice strong move lower. Why? Why strong? Because guess what? That's going to make sellers think this market's going lower. Right? That'll get the sellers to think the market's going back down to that low. The reality, though, is the market's bullish right now, right? And I'll tell you how to spot a reversal here in a moment. But what I'm looking for right now is I want to see sellers try to sell that, right? If they fail, now we know exactly where their stops are. We can buy into their stops, right? Sellers become buyers, and then buyers become buyers as we pull back. Now, just a word of caution here, right? If we don't want to buy into the high of that range here, okay? So when you're looking for that failure pattern into pullback pattern, you really got to make sure you buy nice and low. You know what happens sometimes is we see something like this, where it'll bust higher here, but it'll go right back up. And at that point now, you've missed your window, right? All you have is that failure pattern, right? Because now at this point, you don't want to take the, right? You're not going to take that pullback pattern now because what if it fails? It could be a range, right? This could be a big range, okay? So again, we're going 1 try, 2 try, failure, back up, right? Obviously, failure, strength, pullback, if I can get it, right, to fit down there, right? And again, don't be surprised, right? Don't be intimidated by it if it makes a strong run, okay? Because all that matters is the pullback. Failure, strength, pull back, right, and go up from there. So that's if the price pulls back, right? Now, price goes higher. It should, right? It goes up. Now, what do we do from there? Okay, if we pull back, same plan, right? We pull back, same plan. But if we go through this high, right? If we go through this high now what I have to do is go looking for that continuation. Okay, and the problem is always this, right? You're probably going to see one of two scenarios if we can bust through these highs. Scenario 1 would be kind of like a calm breakout, right? It'll be strong to break out, but it's not going to be a ram it down your throat breakout. When that happens, draw off this high, find my new channel, right, and try to get that buy. Again, failure pattern, trap pattern, right, into strength and pullback pattern coming off of that low, right? And if we're really lucky, we can combine it with the top of that range. Okay, once again, I'm not buying as the market goes higher. Okay, that's a rookie's game. Okay, we don't do that. We want to buy as the market pulls back. Okay, I know it takes discipline, but that's the only way you're going to make money in today's markets. Okay, you can get lucky every once in a while buying breakouts, but it's tough to get lucky. Just like just like sitting in a casino in Vegas. You can get lucky on a couple of hands of cards, but it's difficult to sit there all day, every day, and keep the same amount of luck, right? So just be careful with that. So that's right if we kind of get that lazy move higher. Now, a lot of times, though, what happens is when we see these breakouts, we see it jump up, back, and go, right? If you see something like that, new spike in channel, find that channel, buy the low. Okay, so if we do see that break out, like that strong break, right? Strong break, it doesn't pull back like this, right? Strong break, and it goes, right? 1, 2, go. Then grab that high, bring it down to that low, right? Buy the low of that new channel. Not a very good drawing job there, but again, buying below, right? Buying at support on the way up to that measured move, right? That measured move is also going to be the top of last week's range. So that's where the buyers want to go, right? The buyers definitely want to get to, right, that measured move. The problem is we're seeing a very dismal bit of price action right now. We got to get through this area. All right, guys? Now, I haven't talked about this a lot yet because I've been kind of conscious of the time here right now, but how do we reverse, right? We're bullish right now. What does a reversal look like? And this goes for all the markets, right? Crude, S&P, all the markets. I have what I call a 1, 2, 3 reversal, right? And many of you guys probably know this, right? But it's strength, it's pullback, and it's strength. So how do we reverse? Strength, pullback, strength. How do we reverse? 1, 2, 3. Okay, because remember, if we pull back strong, it's not a guarantee that they hold that pullback and go. If they do, then it becomes a bear market. But most of the time, though, a strong move down in a bull market is just going to end up doing one of these, right? It's going to come down, down, and go, right? 1, 2, and go, right? So that's the tough part. You don't want to try to predict this breakout. So strength, pullback, strength. 1, 2, 3, right? 1, move down. 2, pull back. 3, right? Move over, right? Move down. That needs to pull back to the moving average. Okay, if we get that, then new channel. Find that new channel, sell at resistance, and in this case, the target is back down to retest these lows here, down around that 7,200 area, 7,205, then to 7,200, right? That's the objective for those bears. So bulls want to go back up to that high, 7,320 area. They want to buy low. And again, a great example of that strong move with a shallow pullback. Now, wrapping things up tonight on gold and euro. Okay, as I mentioned earlier, we have the ECB Banking Summit Monday, Tuesday, and Wednesday. Now, it's always tough to tell what you're going to get out of these things, right? Because it won't really be until Wednesday afternoon. It's actually 9:30 Eastern time if you're in the U.S. But, if you're in Europe, right, it'll be Wednesday afternoon. So, 9:30 Eastern time on Wednesday is when we get the first kind of, open discussion panel. And I think that's where you're going to see the most unpredictable price action will be during that time on Wednesday morning. The reason why I say that is because most of the speakers at this ECB summit are likely going to be repeating what they've recently said. We saw FOMC announcement last week. We had the ECB announcement the week before that. So I don't expect that we're going to hear any speakers out of the U.S. or anywhere out of Europe or Asia. I don't think we're going to hear anything new, right, between tonight and basically Wednesday at 9:30 Eastern time. So knowing that, I'm anticipating this market to be quite range bound. Hopefully I'm wrong, right? Hopefully by tomorrow morning, Draghi stuck his foot in his mouth a few times, and we've really seen some great price action, right? But again, typically though, when you get these summits, and they're coming right after our FOMC and the ECB announcement the last couple of weeks earlier this month, I just don't get your hopes up until Wednesday morning. We may start seeing some real good breaks. Okay, so knowing that, we'll dig in. The most important thing right now is that you've got the gold and the euro are both coming off that big drop last week, and they're going sideways right now. Now, we talked about this last week, right? We talked about this. Got a big move down into a trading range. Okay, the goal is is to be very, very disciplined and do not try to sell those breakdowns. Okay, what you want to do is look for the chance to sell above that high, and you want to use that 2-try rule, right? We try to go up, strong move up. Buyers will try to retest that high. Once they fail, I'm looking for that, right, that sell back down. And to be very honest with you, I'm going to be looking for both sides this week, right? I'm looking for the 1-try, 2-try failure back down and 1-try, 2-try failure back up, right? Until we see a little bit more information out of this, right? So 1-try, 2-try, sell it back down, right? 1-try, 2-try, buy it back up. Stay away from the middle. The middle is always the hardest part. And, ultimately a breakout will basically be a strong move, a pullback, and a go, right? If it just explodes on that second try, then we'll know we have a breakout, right? And a possibility for a big, big move at some point this week. So, if I scroll out a little bit here on gold, just going to give you guys a little bit of a bird's eye view here right now, right? Gold is bearish, clearly, with a spike and range pattern, right? Strong move down from last Friday's non-farm, sorry, I keep saying non-farm, but last Friday's quad witching, right? And of course, now we're going sideways here, right, with that trading range. So this happens all the time. You see a real strong move in one session or two sessions. The market kind of has to catch its balance now, right? It kind of has to catch its breath. And while it's doing that, it's just going sideways right now. Okay, so now as I zoom back in now, right, there's my range. It's kind of a weird looking range, to be honest with you, but it's a range. It's definitely not trending very well right now. Bear market down to that range. And ultimately now we want to go up, right? We want to go 1-try, 2-try, and back down in. And don't get me wrong, guys, if we see it 1-try, 2-try, and go, well, heck, we have all this wide open space now. Find that new channel, right? It's the exact same plan for all the other markets too, right? For the reversal, right? And buy the low of that channel on the way back up, right, into that range. This is very similar we're seeing on the S&P right now, right? Where the S&P left that range, and now we're trying to wait for the proof right before we can start buying, going back into that, right, back to that range low, right? So 1-try, 2-try, failure, back down in. And again, as I mentioned earlier, right, what I'll do is this. Here's what I'll do. I'll go 1-try, 2-try, failure. I'm looking for buyer failure to be a seller off the high because of the overall bearish trend. But when you think about the buy side here, 1-try, 2-try, I always like to look for a pullback when I'm going against the momentum of the market, right? So selling high should be the easier one, right? Because the overall trend is down, right? But trying to be a buyer off that low, what I always do is I wait for the strength and then I buy the pullback from there. What happens is, right, we have that, again, that 1-try, 2-try failure, right, into that failure, basically strength, and then to a pullback. I'm looking for that pullback is what I'm looking for here tomorrow morning. So to be a buyer off the low, rather than being aggressive with it and buying that seller failure, which you can do when you go with the trend, right? I don't want to do that, right? I don't want to do that when I'm going against the trend. So I'll wait and actually see proof, and then I'll wait to buy the pullback. Sometimes those patterns never show up. Sometimes they just jump right back into that range, but you got to play it careful because you want to go, again, with the trend at all possible. But, with this, ECB summit, I'm definitely expecting there to be a little bit of chop and slop here until at least Wednesday, Wednesday middle to late morning, right? So up 1-try, 2-try, back down in, right? Down 1-try, 2-try, not back in, buy the pullback. Right? That's the one I'm looking for here tomorrow. And then again, right? Strength, pullback, strength. That's a breakout, right? I'll trade my hidden channel or my spiking channel. And again, be very careful down here. We may see it go 1-try, 2-try, and then right late in the morning get kind of dragged back into that range. Be very careful. I doubt you're going to see anything really materialize here until we get that panel on Wednesday morning, right, from the ECB. How about some euro right now? The euro is definitely a little bit more, what's the word here? Complex, right, than we have here on gold right now. There's a lot going on here on this chart as we wrap up tonight's newsletter. Euro is bearish with a flag pattern and trading and a trading range in the chart this evening. And that tells me to look for selling opportunities using the 2-try rule up in that battle zone above. And possibly, right, the buying opportunities using seller failures down in the battle zone below tomorrow. Now, there's a lot going on in this chart right now, but what you want to just really make sure you focus your energy on is what is the overall momentum of the market right now. It's bearish, right? It does not take a very experienced technician to see that direction, right? Now, what do we need for the market to turn directions? Okay, this is a really good question to ask right now because I'm going to illustrate a point. What do we need for reversal? We need that 1, 2, 3 reversal, right? And what was it again? Strength, pullback, strength. Okay, so now it's a bear market until what? Until we see a strength, pullback, no, that's not a reversal, right? And now, right, a strength, pullback, I don't think so, right? I do not see this market being bullish yet. Okay, so now we have another, right? So now we're on the same page there, right? We haven't seen enough momentum shift yet to call this a bull market. Hey, it might happen tomorrow, but right now I have no proof of that. So we've got to stay patient and wait for that proof, okay? Trust me. Any bit of experience in the financial markets, you know, right? Trend is your friend. You don't want to go bucking the trend here right now. Now, one more thing, right? We have a rising support trend line. Now, rising support trend lines oftentimes create channels, okay? And channels, they look very enticing to be bullish right now. But this is a great example of what we call a flag, right? It's a bear flag. It's a bull channel in a bear market. A bull channel in a bear market. Okay, I know that sounds wrong, right? It sounds like, well, something's not right there. But again, we don't have that momentum going higher yet, right? So what my options are now is whenever I have a bear flag, what I need to do is focus on selling up around the high, right, of this channel, right? It's a channel, but it's called a flag pattern, right? It's a bull channel in a bear market. And I got to focus on selling right up around that high. Okay? Now, I got one more thing here. Trading range. Right? Trading range. Now, I mentioned earlier, right, that anytime we have a trading range, right, we're looking for failure patterns. Well, look closely at this range, and the first thing I saw here this afternoon, right, was that we still haven't tested any of those swings yet. I mean, you could easily say that today we pretty much spent the whole entire day between those two major swings, right? And that's where all the trades are going to happen in a range, right? You're going to see buyers down here below that swing, and you're going to see sellers waiting up here. Okay, so trading range, bear channel, and again, right, sorry, bear flag, and a bear market. So now I can do this. I've got my trading range. I have my channel or flag, right? Flag would be the better word to call it, right? So now I want to see that 2-try rule, right? I want to go up, 1 try, pull back, 2 tries, and sell off the high of this channel, right? Again, flag, right? But do it using a failure, right? Let them go higher here once, pull back twice, and look to sell off of that second try, again, up around the high of the channel, using the 2-try rule above the high of that range, okay? And again, sticking to the downside because that's the direction of the momentum. Now remember, if we get lucky tomorrow, or maybe not that lucky, depending on what your goal is, but if we get that strength, pullback strength tomorrow, well then this is very different, right? Now we go higher, we're a bull breakout, we're looking to buy the low of that channel, and where's our big target tomorrow? Yeah, all the way back up, right? All the way back up to the area where we came from on Friday, right? So this could really, on Thursday, excuse me, last Thursday was the ECB announcement, right? So we got some great potential here for reversal, but we're not quite there yet. So 1 try, 2 try, failure, back down. 1 try, 2 try. Again, momentum is bearish. So I want to go up and buy the pullback as we go back in. Remember we talked about that earlier, right? There's a difference there between, right, going with or going against that trend, right? So as we go higher here, right, 1 try, 2 try, failure, strength, pullback, and back down in. Again, grab that free trading course in the upper right-hand corner, right? You'll learn more about these patterns, upper right-hand corner. Trust me, you'll thank me for this information. And then we go down, 1 try, 2 try, right? It's going to be failure, but then pullback, right? And buy that pullback, right? Buy that pullback as close to the low of that range as you can get, right? And don't be surprised if it really runs 1 try, 2 try, and then we go up, back, and go, right? So don't be surprised if it really tries its best to break down below that range. You stay focused on buying those pullbacks once it gets back above that moving average and that 2 try rule. All right, guys? Boy, oh boy, what a great lesson tonight. I know I'm running late. I know I'm taking up way too much of your time, but hopefully by now, though, you can see why I spent that time at the beginning to illustrate that strong move, deep pullback, retest the high, and crude oil, S&P, Nasdaq were all 3 great examples. We'll be curious to see what happens next couple of days on euro and gold. We get the ECB stuff going on right now, right, in Europe. This will be interesting to see what the day brings tomorrow here. Probably going to stay in that range. Keep fading those breakouts. In the meantime, here, before I let you guys go, don't forget, I've got a great free trial on the homepage of our website. You can learn all about my trading strategy by joining that free trial. I'll put all the links in the description of that YouTube video. And don't forget, we got a place for everybody here, whether you're brand new at trading and you want to make sure you get your office, your software, all your indicators, all your charts all set up properly, or maybe you want to learn how to use the charts in our intermediate classes, and maybe you want to learn the strategy and trade it with me every day in the trade room, right, in our advanced course. I got a place for everybody here on our website here at schooloftrade.com. Don't forget, I'm always here to answer your questions. Hit me up on live support or drop me a comment in the comment section below. Guys, excellent job here today. Great to have you back. Dads, it's time to go back to work tomorrow. I know. We had our day in the sun, right? We're back to work, though, here now this week. We'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, tomorrow evening, same time, same place. You guys know the deal, right? Be well out there. Be nice to each other and be here next time. Adios, amigos.